How to use hard money lending for real estate deals. In this video, we will explore how you can effectively use hard money lending as a tool for your real estate investments. Whether you're a seasoned investor or just getting started, understanding hard money lending can provide the leverage you need for profitable deals. Hard money lending is a type of short-term loans secured by real estate. Unlike traditional bank loans, hard money loans are provided by private lenders and are based mainly on the property's value, rather than the borrower's creditworthiness. This makes it an attractive option for quick financing, especially for real estate flippers and developers. First, know the key players. Hard money lenders can range from individual investors to private lending companies. Research potential lenders, focusing on those with a solid reputation and experience in real estate investing. Understand the terms. Hard money loans typically come with higher interest rates and shorter repayment periods than traditional bank loans. However, they offer speed and flexibility, often closing within a week. Expect interest rates from 8% to 15%, with loan terms ranging from 6 months to a few years. Evaluate the property's potential. Lenders focus on the property's after-repair value. Before purchasing, accurately estimate renovation costs and the potential resale value to ensure profitability. Demonstrate your plan. Present a robust investment plan showcasing a clear timeline, budget, and exit strategy. This reassures lenders of your ability to repay the loan by successfully executing the deal. Have a solid exit strategy. Plan how you'll pay off the loan, whether by selling the property, refinancing with a traditional mortgage, or leveraging another investment strategy. In conclusion, while hard money lending isn't for everyone, it can be a valuable resource for those looking to make swift real estate deals.